Hello traders. The title of the video is how to use a fourth Elliott wave, a corrective a triangle like a pro. Alright, so we want to talk about corrective waves, the corrective a triangle during the fourth Elliott wave, and how can we use those corrective triangle in a fourth area wave. You have to understand that I use the word how to use. All right, so we want to use that triangle. So we have one example here. This is the fourth wave. All right, and we have a triangle. You may say, Joe, where is that triangle? And I will color it now into red. So I also show traders. There was a title of that video, something blah 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 about how to use price structures like gold at 2-4 stock trader channel. And I told trader that whenever you draw in your triangle, extend the lines. So usually a lot of trader will stop here, but you can extend those lines down and up. All right. So here, that's why I'm down here. So we have the triangle here. Another thing that I say to trader when they are talking about area weight corrective triangle, because the theory stated that we have 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 5, yes or no, which we call the ABCDE, a triangle. So ABCDE. Now, my recommendation to traders when we're talking about practical area wave trading using the theory, to deal with the reality of the financial market, is that we want to give precedence to the triangle itself instead of the structure within the triangle. As you can see here, it is still oscillating in that triangle more than 5 times. So you may say 1, 2, 3, 4, 5, and then you start getting confused, see what's going on. All right. So probably here people try to buy thinking they're going to pop out. It's not popping out, and then people buy again and it's still stuck here for a while. Will it come out? So all I say to trader, whenever you are dealing with a triangle, though the theory stated that it has to be 5, each subwave subdivided into 3, give priority to the triangle itself instead of the structure within the triangle, because sometimes the price may not go out or down at the end of the fifth sub wave. So this was going on here. Okay, it may continue before popping up out here. How do we use that triangle? That's a very good question. We measure the width for that triangle. Here it is. And we can use that triangle, the fourth area wave, a corrective triangle, to forecast the fifth wave. So we can project it here at the breakout point. So that's why I put my number 5 here. I can see traders smiling again and say, Joe, now you are improving. You are using the numbers. Ha 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 ha. So here it is. So according to my wave count, feel free to bang the table. Feel free to disagree with my wave count. First wave has been subdivided into 5 manner wave. 1, 2, 3, 4, 5. Second wave subdivided into 3, not very clear. 1, 2, 3. Will you agree? It's the second wave down to this point here. Now our third area wave from here all the way up here, also subdivided into 5. 1, 2, 3, 4, 5. So first wave, second wave, third wave. Now we have our triangle. So if you were here, you will be saying, okay, 1, A, B, C, D, E. So you buy here. If you buy here, be prepared to secure your gain near the midpoint and also at the top here. Doesn't mean that everything is going to come out. You see here, that's why I say attention to the triangle more than the structure. We are still stuck here. But we are now in the fourth wave. Fingers crossed, we can say that now. Our expectation that it will pop out. That's our expectation. The price may do something else out. If, for instance, tomorrow they say that the director was doing something crazy that it shouldn't do in the park, well, that's not good news, isn't it? Or, they come out with some crazy news that the market was not expecting. Well, the price will come down, though we have our triangle ready, waiting for a bullish fifth wave. So anything is possible. That's why we say to trader when we see the triangle. So the first way to use that triangle, measure the width to forecast the end of the fifth wave. Doesn't mean that the fifth wave will definitely end here No, it's a guide. It can end there, and we want to know that level. That's all. It's just a guide, okay? So now that you set that target there using the width of that triangle, you will also do something very important that we taught today at the Pro Trader YouTube channel. Apply Fibonacci extension to the, okay, all right. We can apply it. Now, I'll leave that one out now because today will get confused. You see, because this third wave is subdivided into 5, we can apply the Fibonacci extension to that fifth minor wave of the third wave. All right, this is the fifth minor wave of the third wave, and we can highlight which level? The 138.2% Fibonacci extension level, a little bit above that level. That's what myself I will do. Okay, so the target is in a zone of 143. Applying Fibonacci extension to the fifth minor wave of the third wave is bringing us to the zone of call it $149, 150 zone, a little bit above it. It's not bad place, okay? All right, so we use the triangle, the height of the triangle. What you need to do, my friend, you draw the median line of that triangle. A lot of traders do not do that. Anytime you see any triangle, try to draw the median line. Sometimes it's not easy to draw the median line of the triangle. You can see that I struggle a bit. I put it diagonal. It's not exact. Don't be straight. So be more concerned about practicality of what you are trying to do. You can see that I just put it through the middle. I put it there. You can see that it's not exactly the median line of this move down. I'm happy with it. I leave it as it is. So the point I'm making here, don't be too straight when you are trying to draw the median line of some of the triangle. It's not easy to draw it, but be more concentrate on the practicality. Can you work with that? That's what I'm saying. Can you work with that? Will that be useful for us? That's what I'm saying. Don't be too straight about, okay. Because if you do it, you're going to spend hours trying to make it be accurate, all right? That's what I'm saying. So I leave it, see, now that I try to move it, I start getting all kind of blah, blah, blah. So I leave it like that. So draw the median line as you can of that triangle and extend it both ways. You can extend it all the way up here, extend it there. Those lines will help you. The next thing that you can do, talking about how to use the triangle of the fourth Elliott wave, you can do something very interesting with that median line. You can measure, okay, the angle, you see, has to be on a vertical line. So that's why I say subscribe to 24 Stock Trader, the only channel I promise to make amazing on YouTube, and you understand what we are doing here. Traders that are following and know what I'm doing, we project that angle on the vertical line, and you just start using it from this point. You extend the line there. So you have a new trend line there that will help you during that fifth Elliott wave to monitor the reaction of the price around those trend line that we are drawing now, using our measuring stick of the angle, okay, between the median line and the top of, okay, yeah, something like that. And then I will put it one more time on the same vertical line. You don't want to put it on another vertical line. Has to be exactly. So what you can do, go to 24 Stock Trader YouTube channel and sit down, grab your favorite drink, all right, and watch the playlist about trend lines. Okay, trend line, something trend line. So we can keep doing that, projecting it. All right. So those trend line will be useful for us as the fifth wave is springing up, okay, going up, okay. Another thing, so this is how we can use the fourth wave, the triangle in the fourth wave to help us to trade the fifth Elliott wave, to forecast the fifth wave, measure the height of the triangle, project it above, set a target. Right, but do not forget that that's not the only target, that's the one expectation. There are many ways that we can forecast the end of the fifth wave. Another one, we can connect the high. You see this high of the first wave and the high of that third Elliott wave. Okay, that trend line, we leave it there on our chart. It can go up all the way to touch it. It's a beautiful French word for that, ricochet. Go and ricochet, touch it. All right, so that's another way to forecast the end of the fifth wave. at the top correcting the high of the first wave and the high of the third area wave. Extend that trend line, leave it there. I talk about, okay, if the third wave is subdivided into 5, apply Fibonacci extension to the 5th minor wave of the third wave and set it there. So now, the next step is this. The next step is so we have finished with our triangle in the 4th wave. All right. So another thing I need to mention to traders, because this consolidation has been going on for some time, if it's prolonged, talking about the time it takes, we can expect the 5th wave to be extended. All right. So that's why we need to do the projection of the channels, the angles ready in case we see, okay, the 5th wave going up and it's pulling back many times, so we can know where to re-enter the 5th wave as it's extending. All right. So the next thing that we need to do is to go into the mind of other traders. So other traders may not count their wave as I did myself here. I will not say to other traders that use stupid traders, I am the only one that know about area wave count. I will try to go into their mind and see what those crazy traders are also doing. All right. So another trader, a group of traders may say, all right, George, this is the first wave. All right. I don't care about your area wave guidelines. And I need to remind traders that there are area wave practitioners that believe that the second wave can even come all the way to the beginning of the first wave, as long as it does not break below the low of that first wave. So for those traders, I am not one of them. I am not, right? They will say that this is the first wave, this is the second wave, George. This is the third wave, subdivided into 5. First minor wave of the third wave, second minor wave of the third wave. And this is the third minor wave of the third wave. And this is the 4th, what we are calling real 4th wave. Those traders will say this is the 4th minor wave of the third wave. And George, you crazy area wave trader, your forecast for the real 5th wave is the 5th minor wave of the third wave. And our real 4th wave will be coming down later on somewhere at this point in time before we have the real 5th wave. Are you getting it now? Anytime you count your wave, don't forget other traders. That's all I want to say here. Next thing, when you count wave on one particular time frame, don't stop on that time frame. It is a mistake. You want to see the bigger picture. So now I'm going to remove some line and I'm going to go to the yearly chart and see whether I have violated the area wave principle or not. All right. Now, one more thing before I change time frame to go to the yearly chart is that I draw another line here, which I'm going to color now into orange, this trend line here. Pay attention, I did it on purpose. I want you to understand that. You can see that the price formed this low here, and this low within the higher low, a low and a higher low within that triangle. You need to pay attention to that because we are expecting a 5th wave, and that 5th wave, the price may pull back to retest that trend line. So that's why I leave it there. And there is also intersection between the median line of that orange trend line and the median line. There is also an intersection between the median line of the triangle and that orange line here. Okay. So be aware of it. That's why I leave it there. Now let's go to the higher time frame because the higher degree wave count will command the lower degree wave count. So we cannot stop on the monthly chart to validate our wave count. We need to go to the higher time frame, and I will go to the yearly chart very fast, and we look at it and see whether everything is adding up. Following our guidelines, if you were here, you will say this is the first wave, second wave. I would say, following our guidelines, I would say it cancel it. Other traders may say it did not, as I show you already on the monthly chart. That's what we are arguing about. So there is always disagreement when it comes to area wave count, and we need to take into consideration other traders. So personally, I would say that the price form a double bottom chart pattern, which is a cycle point. This is adhering to our wave count guideline. We can start counting wave at a cycle point. So it went up, turn around, come back to the starting point. This point here is a cycle point. In 2009, if you go to the monthly chart, you see that that trend has started when the S&P 500 is also starting, see 2009, is starting a trend. We are at a cycle point. So good. All right, so it's aligning with our teaching, our method of using the Elliott wave principle. All right, so go back again. So now we acknowledge those traded that count their way from here. We are aware of it. So we can say that the disagreement is not much because they are expecting a fifth wave, which they are calling the fifth wave, the fifth minor wave of the real third wave. That's what they are calling this one. We are calling this one, the fifth wave. So they are expecting it to go up. We are also expecting it to go up. So then they will expect the real fourth wave, which means they will expect a pullback. So for us, that will constitute part of our correction. So we are brothers and sisters. We can't fight them, yes or no? Huh? So leave the fight somewhere. We'll fight another day. So we will not fight them. All right, they are brothers. So whether they are expecting their real fourth wave and so on, and the fifth wave, we will be expecting our correction at the end of the day. So not much different. So on a higher degree, okay, we start counting wave here. First wave, second wave. All right. Now, this is our third wave. You see that? And this is our fourth wave on a higher degree. But do you remember what I said also? Anytime we are calling something third wave, we can expect that thing on any time frame to be extended. So you see here, so on the yearly chart, as I've changed now from the monthly chart, I've done my homework on the monthly chart. Now I'm going to the yearly chart to see whether everything is adding up. There's a huge warning. We need to be careful. So you may turn around a few years later and say, George, I'm not very sure, but you should quit completely Elliott wave count and do something else. Now, the reason why I'm saying this is this. See here, so on the yearly chart, we say first wave, second wave. So we are calling this third wave. And then I'm saying to you that anytime we call anything third wave, we can think of it that it can be extended. On the yearly chart, though at this point in time, with the information that we have on this chart, we are calling this third wave and calling this fourth wave. Don't be surprised if we have this supposed to be third wave springing out, which may go up more, and the price is going up, okay, to form an extended, okay, a third Elliott wave on the higher degree. So we will go back again to our chart. It's not that we were wrong, but at this junction, we can still make excellent decisions. If it's been extended, we will follow it. Just flow with the price. At the end of the day, flow with the price. This is the warning. A third wave can be extended. A fifth wave can be extended. First wave can be extended. All right. So far, so good. It looks good so far. All right. It looks good. So this is about how to use a fourth wave corrective triangle like a pro. All right. First, you want to make sure it's a real fourth wave. So when you label it as a fourth wave, go into the mind of other trader and see what other trader may see. All right. And I take that also into consideration as we are using that corrective triangle of the fourth wave to focus the fifth wave as I'm doing it now. So it's like your insurance policy by checking on other traders and mapping out. So you can print out that chart, okay, print out the wave count of other traders, the expectation, stick it through the wall, and your own expectation. And if there is a huge, okay, divergence between your wave count and other wave count, you need to pay attention carefully and keep your left hand side eye on those traders carefully. All right, so they don't end up messing up your beautiful Elliott wave count. All right, another thing I need to mention to traders here is that this third Elliott wave is what? A normal third Elliott wave is not extended because it did not go above the 161.8% Fibonacci extension level of the first wave. And again, that third wave of us, all right, can be extended. So we may say 1, 2, 3, 4, 5, forming all this may form. Again, the first minor wave of the third wave itself, you see, have we talked about the infinity of Elliott wave? You see, 1, 2, 3, 4, 5. Okay, 1, 2, 3. Again, we have to start again. 1, 2, 3, 4, 5. 1, 2, 3. So now all this can be just the first manual way being extended or the first way, and so on. But we don't want to make it too complicated. We leave it as it is, but we are aware of it that anything that we label 1, 3, or 5 can be extended. So as we are here talking about fifth wave expectation can be extended. And then sometime when that is extended, you may go back again to the chart. So my intention at 2-4 Elliott Wave 2 channel is to help traders to adopt an open mindset so they do not have a narrow mindset. So they always take into consideration the scenario that are possible, the extensions, and the other traders. To summarize the video, when we have a triangle in the fourth Elliott wave, all right, we measure the width of that triangle, we project it up for the next impulse wave because it's a consolidation. You look down on our RSI period 14, it's a beautiful setup. When the RSI talk about it at a Day Pro Trader YouTube channel, that's why I said you have to subscribe. When the RSI goes from the overbought to oversold. Here is a very interesting scenario, and it would be nice if the stock spring out nicely, beautifully. All right, that would be beautiful, nice. Okay, so deep, beautiful. Goes from overbought to oversold. If it starts changing direction, which it start aligning with the price, see the price was doing ups and down, while the RSI just going down. Now the RSI start changing direction here. If it start going up, the price has a high chance to follow the RSI. Have we talked about it before? I talked about it at Day Pro Trader YouTube channel. What is the correct word I was using that time? All right. So it's like it's not a real divergence. It's like okay, disagreement. And then agreements. Can we say that? So price doing all kind of things where the RSI resetting itself. Now RSI is turning, all right, and the price also following suit. So you measure, you project it up, set your targets, draw. Don't forget the median line. Extend the lines of the triangle because if a correction is underway, suppose we were here, the fifth wave has ended, and the correction is underway. You want to watch those trend line as the correction is underway. They will be very, very useful to you as the price is coming down. Finish your wave count. You label something fourth wave. Go into the mind of other traders. Compare your wave count to other traders' wave count, and also check the higher degree wave count. As always, the Elliott wave forecast is an expectation. Just be calm. We are expecting a breakout. Use a different time frame trading method to control the risk, and so you may get paid at the end of the day. If you have any question or suggestion, feel free to put in the comment section, and of course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another poor performance, mark it down. If you think it's an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. This will conclude our discussion today about how to use fourth Elliott wave corrective triangles like a pro. Happy trading to you all, and speak to you soon. Thank you for watching.